Are you aware that some oil and gas drilling EFT have seen over 70% growth this year? In addition, are soft commodities soaring by 30%? EFT bonds are also performing better than government-issued bonds. There is more in today's video on the best ETFs for new traders. Let us get started. Number 5. Vanguard Value ETF VTV. ETF investing for beginners can get a bit confusing. There are millions of commodities to grow stocks in tech and a vast choice for anyone who wants to get involved. Usually, the commodities are the more relatable stock. In fact, regardless of the situation, commodities will still sell across borders and not flat out entirely. However, there are options outside of commodity-related stocks. We are taking a stroll along the most significant commodity investments for Vanguard Value ETF. For instance, Johnson & Johnson, the world's leading commodity company, and Procter & Gamble Company are available for grabs when you invest with this fund. The assets are over $100 billion and offer over 350 positions with these top commodities companies.
Massive.
However, Vanguard EFT are lower-risk value stocks. They are for people with a low-risk appetite and the patience to make money long-term. The assets are split between sectors, including healthcare and financial services. If you want to avoid those large-cap funds, then welcome to your new favorite ETF. The fast life is not for you anyway. That is reserved for Cathie Wood fans. Stocks are the best way to make a sound return. However, sometimes you might want to try bonds too. They withstand all economic turbulences and have capital retention that works for market upsets like the impending recession. The Vanguard brokerage offers short-term bonds too. We will share more on Vanguard short-term bond ETFs with you shortly. Number 4. iShares Global Energy ETF IXC. Energy is a commodities market that never runs out. Even when COVID-19 shut the world down, the gas stations still pump fuel for essential workers. Think of all the money Amazon made during the pandemic and ask yourself if their drivers were not compensating the energy sector. Currently, IXC is the exchange-traded fund for beginners. iShares Fund is worth $2 billion in total assets. Their stocks are roughly 50 and are based across the world. Even though the U.S. is the largest represented in the fund, consisting of approximately 60%, wherever energy stocks are in the world, the fund targets it. Suppose you invest with iShares. You have shares in top companies like ExxonMobil Corporation and Chevron Corporation. BP plc is also featured as the one international stock known locally. Nonetheless, there are many other global companies in the fund. If you are interested in a diversified energy ETF, consider IXC right now. Number 3. Vanguard Short-Term Bond ETF BSV. Treasury bonds are short-term funds with tough skin in the face of harsh rising interest rates and tightened financial guidelines. Of course, investing in a bond instead of a stock is not a step down. To be honest, they are worth within the same interest brackets. Currently, the Vanguard Short-Term Bond ETF pays a 2.9% yield. To compare, the United States short-term government bond yield as of July 2022 is 2.7%, a step down from its 2.8% yield last year. That amount is small, but it is at its highest rate yet, so you might want to take it up, mainly because stability and capital preservation are crucial in the current recession. Now away from low-hanging fruits and in the big leagues, a fund has risen 78% this year alone. Its target is to focus on the individual stocks that are doing well and push that further. Along the line, we will present you with our top pick, the dynamic ticker, PXC. Number 2. ABERDEEN Standard BLOOMBERG All Commodity Strategy K, one free ETF, BCI. All raw materials are up for grabs in this ETF. BCI looks beyond oil and gas and plays the field in key raw materials, soft commodities, gold, copper, and other natural resources.
Everything.
There are at least 24 commodities under this fund. The fund selects the commodities based on their global trading volume, overall global production, and availability and depletion status. As of June, the fund has risen 30% in 2022 alone. Meanwhile, the fund structure avoids K-1 taxes. K-1 taxes are federal taxes that cover annual income, losses, credits, deductions, and other distributions for each partner, shareholder, or beneficiary. The $1 billion fund hedges against inflation and volatile market trends while avoiding commodities taxes. If you ask me, that is a true winner. You, too, can be a winner if you subscribe to this channel for more fantastic investment content. Number 1. INVESCO Dynamic Energy Exploration and Production ETF, ticker PXE. Here we have an energy fund focusing solely on oil and gas drilling. The companies rank over 30 positions in this fund and are all dynamic with their production and money-making ventures. Some companies have a roughly immense market value like ConocoPhillips, with about $150 billion. However, the lesser-known mid-sized players are equally available. The fund is performing tremendously in the face of the wreckage that has become the U.S. economy. The structure of this fund is to target and benefit from the stocks with the highest price and earnings momentum. So far, that approach has fetched a 78% increase this year alone, and 20% of that occurred in May alone.
Where do I sign up?
What could be better than racing against the recession winning? You tell me. ETFs for beginners done, index funds for beginners next. If you have not seen it, here is a guide on how to invest in index funds.